Hello folks, this is Raj Sastri from Raj Option Trading. Today I want to talk about top Israel stocks. There are few very good stocks in Israel. Let's cover them. According to Reuters, in 2020, there was a smaller dip in Israel than other countries. So that's a good news. It only cost 2.4% contraction in Israel's economy. And Goldman Sachs expects 7.5% growth this year. So they predict growth will be exceptionally strong in 2021. So mainly because there is a very quick, acceleration in vaccination drive in Israel. So that will basically help for the economy to open up very quickly. There are some good tailwinds happening in Israel. So with that in mind, there are a few very good companies. We'll talk about them. I have a few images here. One is Fiverr. It's into freelancing, and there is a Nano. Nano. It's into 3D printing, and then we got SolarEdge. This is into solar, as you can think of. So with that, we'll cover this in a little more detail and take it from there. So here are my top companies here. First is Foresight Autonomous, Nanodimension, Fiverr, Evogene, Perion, and so on. You can just go through the list. The ones in bold are my favorites. We'll talk through a few of those and look at why those are my favorites and take it from there. So these are the list of top companies, and this is sorted by performance. As you can see in this list, we got 1 year of return, and it's in the descending order. The company on the top, Foresight Autonomous, it's got 1,176% performance in 1 year, and it's in the descending order from there. And we also got sales, which is same as revenue, a revenue change for 1 year, revenue change quarter over quarter for the latest quarter. We got cash, debt, free cash flow, short ratio, gross margin, net margin, and sales price to sales ratio, or PS ratio, which is a valuation ratio. So with that, first is Foresight Autonomous. So it's got an astounding performance, as you can see here, and stock price is still low, 6.51. It's a EV electric vehicle play, and they don't have too much revenue right now. They're in a development mode at this point, and they got good amount of cash. It's a $15 million cash and not too much debt, and free cash flow negative. So in this company, we have to go by their performance and what company is saying at this point, because they don't have any revenue to show off at this point. Um, Next is Nanodimension. Nanodimension is a 3D printing play. They help with the printing the circuit boards, PCBA, and they want to disrupt that whole market of the design of chips. It's a very low price stock, $9.12, and $2.2 billion market cap. Huge 1 year return, 1,122, and they got 3 million in sales. One thing to notice, really, from a revenue perspective, revenue change perspective, on 1 year basis, they're negative 51. Quarter over quarter, they're negative 0.30. Some of this they're talking about, it's really COVID, some of the expenses they have to incur. And they have a huge short ratio, as you can see, 23% short ratio. That can help company to really have a short squeeze and stock price to go up. And these gives a good amount of cash. They raised some cash, $671 million cash on hand. And they got good gross margin, and they're still not making money. That's why net margin is negative. And it's a pricey. It's a price to sales ratio is 714, high valuation. So we have to watch out because really sales is a little bit less. That's why price to sales ratio is very high. Next, we got Fiverr. Fiverr is again a famous company. They're into freelancing. A lot of my friends, who who always get some help from Fiverr for their work. It could be designing a website or any IT work, programming, and you name it. These guys do all sorts of freelancing in multiple categories. It's a good company, and stock has been doing really nicely, 917% over the last year. Nice year over year revenue and nice revenue, quarter over quarter revenue also. They got a good amount of cash, nice gross margin, still not making it from a net margin perspective. Next is Evogene, $5 stock, very low stock price, and good, 1 year growth 6.90, humongous, huge revenue quarter over quarter change, which is good, and they got very good gross margin. And again, valuation, you got to watch out for these early stage biotech companies. They seem to tend to have a little bit high valuation, so stock price is low. You could invest a little bit and let it run. And the theme is same. Then we got a couple other stocks here. Theme is same. I look for very good performance on an annual basis and very good year over year and quarter over quarter revenue change, and good gross margin. So one thing to note here, SolarEdge, it's a very good stock. It's into solar, but off late, due to some issues, their revenue, as you can see here, quarter over quarter is negative. But I'm sure this will, this situation will improve as we go forward. InMode, we covered it earlier. It's again a good stock. So, and then we got VIX and Nova Measuring and Itamar, and the last one here, Portalix. Now we'll go into a little more detail on two companies, and go from there. The first company we'll go into a little bit detail is Fiverr International. So Fiverr International, it develops e-commerce platform that allows people to buy and sell digital services. The firm offers digital marketing, graphics, video animation, multiple categories, 500 categories in 8 verticals. And as you can see, a lot of companies are leveraging their services, especially because of COVID. People are forced to cut back on the resources or permanent employees, so they are going for freelance employees. So that's why this company got the tailwind and it's really doing well. And the CEO has got 95% approval rate. It's a good story there. And stock price is 225, is a little bit pricey, and market cap is still low, 8.09 billion, has a lot of room to grow. And it's got a competitor, Upworks, which is doing okay, but not as good as Fiverr. So with that, if you look at the stock chart itself, very nice stock chart. Last year or so, through COVID, this company has done really nicely, and they're expanding and putting a lot of money into research and development to grow their platform itself. And they got a good amount of revenue, 190 million, nice revenue growth, good amount of cash. Debt is manageable, not too much at all, and good operating cash flow and free cash flow. So the CEO, Mika Kaufman, he's also co-founder and chairman. He started the company. It's good to see a founder still at the helm. And he also did a lot of other ventures before starting this company. He led several technology ventures, and multiple companies in the past. And from a headline perspective, people are really wondering, will there be, where will Fiverr be in 5 years? It's a motley fool. I think who needs a sell-off? This company is really doing well, so that's why you can see a lot of good press here. And I think somebody here is a little bit skeptical from street.com. So you see ideas both sides. And also somebody talks about better buy Fiverr versus Upwork. So a lot of comparisons also going on, but overall I feel this company is doing great. It's really a breather here, but as you can see here, the uptrend is really still in play, despite of this short bump here. So with that, let's go into fundamentals. From a fundamental perspective, this company has been growing in market cap. As you can see here, 750 back in 12/31 2019, all the way to 4.48 by 930, and now it's even more, which is 8.9 billion. So it's really growing very nicely. That tells me it's really taking the market share from the competitors. From a revenue perspective, also, as you can see here, revenue is steadily and nicely increasing, which is good to see. Revenue acceleration, which is a good one. And year over year revenue consistently high double digits, which is very good to see. And they have been surprising Wall Street with the revenue surprise all along. Sequential, surprise on the revenue side as well as on the, earnings per share side, which is very good to see. And nice gross margin. It's good to see 80% plus gross margin, mainly because it's into SaaS. It's got a platform. They're also thinking about SaaS going forward. A negative net margin, understandable. Company is still investing heavily into its own R&D. They got good amount of cash, some debt which is manageable. I think they acquired little more debt back in quarter ending 12/30, which is manageable, not bad. And the PS ratio, price to sales ratio, is still manageable. It's not too bad. And PE ratio is not meaningful for this company. And shares outstanding is manageable. No big red flag at all here. It's not much at all. So now we looked at the fundamental, for the few quarters here, good trajectory. And in the earnings statement, they're also giving solid, strong full year guidance, 2021 guidance. It's good to see a company's confidence. And they're also predicting a year over year revenue growth of 46 to 50%. Also good to see that. Now let's go into a little more into their earnings statement to see what's in store. So if you see here, they talked about Q4 earnings. This was back in February 18, maybe a month or so ago. And they had a solid growth here, 89% year over year growth in revenue, which is good. And active buyers on the platform, it's surpassed 3.4 million, which is good, 45% year over year growth. And also the spending increased, for the current cohorts, the spending increased average 15%, which is also good to see. And most of the companies, because of this COVID-19, their freelance hiring budget has been increased by 56%, which is good. At least for this company, it's a good news. And digital transformation is going on, and they're increasing their revenue guidance for next year, which is good to see. And they're also, for the first time, they're expecting revenue to surpass $2 billion in freelance, which is good. So overall, I feel this company is doing really great, and also I think they're branching into marketing and trying to have some resource for the marketing team. Overall, I feel good about this company. Nothing, no bad remarks at all so far. Company seems to be doing really nicely. Now let's go into next company. Next company is Nanodimension NNDM. It's into intelligent machines, 3D printing as an example, and they have Dragonfly Pro system, conductive insulating inks, print for printed electronics, and these guys are really cutting edge in this area. And they have system that produces professional multi-layer circuit boards and radio frequency antennas. And they also provide nanotechnology based conductive ink, switch software, and multiple things. It's a great company. They got a lofty vision to disrupt this entire PCB and circuit printing industry with their cutting edge 3D printing. So as you look at the stock chart itself, stock chart is a little bit up and down. As you can see here, it's a 3-year chart. So I think they kind of did well. They came down. Now they're kind of going up. So I think during the COVID days back in 2020, I think it went down. And a little bit later, I think stock started going up again, which is a good story. And now, with all these growth stocks taking a back seat, the stock came down a little bit. From a CEO perspective, this, Mr. Stern, he's a seasoned executive, proven track record. He has done multiple things. He has done defense, communication, aerospace, home security. He's got a lot of multiple things, good background. And he also has a BS degree in mathematics and computer science. And he's from a CEO perspective, he checks out. And there are a lot of news about this company. They have first ever additively manufactured um, electronic communication circuit board, and they announced their earnings back in March 11th. And there are some good press here about this company. It's one of the top 3D printing stocks per Investopedia. Kathy would also share her thoughts. A lot of good news about this company. And also, I think its company fell 28.4% in February. So I think there's also some news about stock falling off. I think this is the dip right here. So with that, let's go into a little more detail of this company. But at the high level, stock price is very low, and the market cap is also it's 2 billion. I think this stock has got a lot of room to run, and the CEO is really he's got some good ambition. He want to disrupt this entire PCBA and the circuit board industry with this 3D printing. All right, so now let's say look into fundamentals. From a fundamental perspective, this company, as you can see here, from a market cap perspective, has done very nicely. It's increasing the market cap every single quarter, and now 1231 1.26. I think right now it's around 2.27 billion dollar. I think it's really doing nicely. That means it's taking the market share and growing its market cap. And revenue itself, as you can see here, it's a little bit yo-yo. It's up and down. I think they have done nicely up to COVID. After the COVID hit back in 331, I think this is where they came down a little bit, and then they went up again. They came down in 2030, in April, I mean December 2020. So that's where it's a little bit unpredictable revenue, but I think they are getting a footing at this point. From a revenue surprise perspective, as you can see here, two hit and one miss. So same story on the EPS, earnings per share surprise, two hit and one miss. From a gross margin, I think they have come a long way. They have got positive gross margin here. Um, Net margin is still negative. Means they are still not making money. They got good amount of cash. I think they've raised some money, and CEO also talked about potentially they might do some acquisitions to buy some companies with the cash they have. So they're going through some due diligence. And nice PS ratio, a little bit higher side, so a little expensive from a valuation perspective. And shares outstanding are kind of manageable, not no alarm here. If it's a huge acceleration, I would be alarmed, but this is okay. Now let's go into company's earnings and see what CEO Yuan Stern has to say. So he, looks like he's really happy. The revenue ended up about 3.4 million, about half of our revenue before year before. So revenue took a beating, but it did better than what CEO expected. And one thing he talked about is really, folks are upgrading the machines, and they're also buying laser blades, consumables, and they also have service contracts. I think that's where their revenue comes from. It's a razor blade type business where sell the machine, sell the consumable, sell the service contract. So that way it's a recurring revenue once they sell the machine. And they're also not seeing major change in 2021. I think they're expecting things will go up going forward. And they're also hoping for new trend of buying machines. And but by now adding the revenue from non-machines. So currently, as of March 11th, they're making more money in the non-machines, the consumables, and they raised some money, so they will be looking at mergers and acquisitions to really buy some companies. Looks like they already signed some letter of intent. And going forward, it is where the ambition of the CEO. He want to change the industry, which is 70 years old and non-environment friendly, very inefficient. So with this 3D printing technology, he want to disrupt this $30 billion market size with this cutting edge technology, which is a lofty ambition. I think it's really good goal to have. So with that, now let's go into little more detail on what do we, now we looked at all these things. What do we do? So from a recommendation perspective, I feel we looked at the companies a little bit. The ones in bold are my favorites. As you can see, your performance perspective, 1 year performance is huge. It's in the descending order of 1 year performance. Foresight, huge performance, and they've a little bit they've a little bit pulled back in a monthly, 10-day, 5-day basis. This could be an opportunity for us to pick some stock up, especially it's a good company, and this whole autonomous EV play, electric vehicle, is in inception at this point. I think there's a lot of room to run. Nanodimension, like we talked about, huge yearly performance, and they've done well in the 3 month, up to 3 month. Since last month, they've given some, they have pulled back. Could be a good opportunity to buy, and they got huge short ratio. So any good news, these shorts will be squeezed, and the stock can go up. As we go into the list, same story here, huge 1 year return. And as you can see here, in the returns, the stock pulls back sometimes, say 1 month interval. So I think, if you see a stock is pulling back hard on a monthly basis, a week, 10-day basis, weekly basis, that could be an opportunity to add some more stock to your position. So with that, one more thing to look out for is this company here, Medigus. It's got a huge short ratio. Stock price is low. This can also cause some short squeeze. So something to watch out for. So in short, the stocks in bold here are my favorites. I think we talked about Nanodimension and Fiverr, but other stocks are also very good, like InMode, SolarEdge, CAMTek, even VIX. These are all good companies. You can look for pullbacks. Some of these have already pulled back really hard. You could buy some and invest for the future. With that, thank you very much. Happy investing.